Prayesh Jain joins in from Yes Securities to assess the fundamentals of the space. And Prayesh, to begin with, let's just talk a little bit about the kind of move that we've seen in some of these auto stocks. It has been a bit of a temporary phenomenon, but given the fact that we've seen such a slump, not just in the sector, but in the stock prices as well, do you think that this move of some of the auto stocks, it's a temporary phenomenon, or do you think names have bottomed out?
See, our sense is on the auto stocks is that there is more weakness in store, and if you actually look at the way the demand is panning out, it's still not recovering. The festive season, which is around the corner, is not expected to be a great one either. And with the current up move that has happened is on the back of two factors. One being there's a lot of expectations around the GST council meet, which is there on the 20th for a rate cut. And the second is the improvement in monsoons. Now, the monsoons can definitely be a long-term booster for the demand, particularly from the rural areas. But a GST rate cut, and that too possibly a temporary one, will just provide a short-term boost. And then when we head into FY21, where you will already be seeing BS6 impact coming in, wherein the prices would be up by around 10%, 10 to 15% across the board, the demand could weaken again in FY21. So GST rate cut, a permanent rate cut would definitely be a booster, but definitely not a temporary one.
Okay. So Prayesh, where within the auto space do you actually see potential, and what could one possibly consider buying at this current juncture? Because the bad news seems to be somewhat baked into the price, and selectively one has also seen some of these stocks now recover and go back to a 1-month high.
We don't have absolute buys on any of the OEM stocks. Relatively, we like M&M and Bajaj Auto, and for that matter, we remain sellers of Maruti Suzuki and TVS Motors.
Okay, and how is it that you're assessing the scenario at present and over the next few months? What, according to you, could be the fix? Because, a lot of chatter around whether or not a GST cut could really solve and rescue the situation, whether this is structural. Some are calling it a millennial issue because they're choosing to, go for aggregators like an Uber and Ola. Where do you think the fix lies?
See, there are multiple issues. Actually, if you look at the individual segments and break it up into the consumer segment, wherein the passenger car and two-wheelers come into play, and the commercial vehicle differently. Now, coming to firstly to the passenger vehicle and the two-wheeler segment, the demand issue has been driven by the fact that the first-time buyer seems to be going away from the market, and the reason for that has been two-pronged. The first one being the lack of finance availability to these people, considering that NBFCs and banks have tightened their lending norms, and there is a ambiguity or averseness to investing towards these kind of assets which are depreciating in value. And so there is some apprehensions with regards to the future incomes by these individuals as well. So there is postponement of demand coming in from these kind of buyers, and obviously there is a liquidity issue in the market. So both these factors have impacted the demand on the passenger vehicle and two-wheeler side. And on the commercial vehicle side, the factors that have driven for a slowdown, for the massive slowdown that we've seen, is that the kind of capacity creation that we have seen from the axle load norms, ease of transportation under GST. So the capacity has gone up, and amidst that there is a slowdown. The freight availability has weakened substantially, and in the meanwhile the diesel prices have not softened a great deal. So the freight rates have gone down, but diesel prices haven't. So the profitability majority of fleet operators have taken a hit. So all these points have caused the fleet operators to not consider buying a lot of vehicles in the current scenario. Now, to fix this situation, definitely you need measures which can address these concerns. The recent measures that the government has taken are hinting towards that easing of financing, but still it will take some time before that flows down to the consumers and improve the sentiment for the customers. So I think there is more that needs to be done for this sector, and actually it's going through a cyclical downturn as well, particularly for the MNHCVs after seeing 5 years of upcycle. So we'll have to live through the cyclical downturn also in the MNHCV space.
Okay. What about, the major paradigm shifts taking place, the fact that there is a change in the consumer sentiment and preferences, the upcoming disruption as well? Should one stay away from the sector till we see things on this front at least stabilize?
See, the earnings expectations for FY20 and 21 are muted, and for most companies there would be a decline in earnings estimates. And until the time we see that FY22 is going to be a significantly better year in terms of earnings, I don't think so the stocks would start looking up, and we would continue to have an underweight rating on the auto OEMs.
About, some of the key takeaways that you've gathered, Prayesh, from this slowdown, how different are things this time around? Do you think that it's far worse? We've of course acknowledged the fact that in terms of the volume data, it's been the slowest since the year 97, 98. Do you think that what have been some of your key observations from the kind of slowdown that we've seen in the past within the auto sector?
This is definitely the worst slowdown that we've seen for the past many years, and there are multiple things that have played a part in this slowdown that we've seen. Just for example, the two-wheeler prices since last November, when the insurance regulations changed, I think the prices are already up around 15%, and with BS6 coming across, there is another 10% hike. So we are already seeing around 20-25% increase in vehicle prices because of implementation of various regulatory changes that we've seen. So and apart from that, there is a fundamental slowdown in the overall economy as well, as seen from the various data points that has come across. So there is an economic slowdown. Plus, along with it, the regulatory changes that have been implemented, which used to be implemented at a more granular or more distributed manner, rather than be coming in one go within a period of 18 months or thereabouts. So the kind of regulatory changes that we've seen in the 18 months, we've never seen that in the past. So that has also been one of the factors that has caused this slowdown. So these things are not going to change overnight, and the prices are here to stay. The higher prices, unless a GST rate cut happens, which will stay for the entire duration, rather than just for a 6-month or a temporary rate cut. If that happens, then you might see some revival. Otherwise, it's a very difficult phase for the auto industry.
Great to have you on the show. Thanks so much for taking the time out.